Well, the NASDAQ composite got a lift today. We just saw that thanks to a rebound in shares of NVIDIA, but the Dow Industrials fell behind. Let's get some perspective. Joining me is Grant White, Portfolio Manager and Investment Advisor at IA Private Wealth. Grant, thanks a lot for joining us. What's your view of this activity we've seen in the tech stocks? NVIDIA, Celestica, we just talked about as well. These stocks have been zigging and zagging recently. What are your thoughts?
Yeah, it's interesting. I mean, so goes NVIDIA, so goes the markets these days right now, and especially on the tech side when you're looking at the NASDAQ or even the S&P 500, right? I think that what we're seeing right now is a little bit of profit taking, and why not? I mean, you've had such a nice run up in some of these companies, especially anything in the AI space, which is obviously continuing to be a big theme of 2024, and I think likely will be throughout the remainder of the year. So I view this more as some profit taking in the short term, but I think that this story is going to continue on. But I would caution investors. I don't think the easy money is going to be in companies like NVIDIA going forward. I think you're going to want to look more for some outlier companies that are maybe more of the pickaxe makers, if you will, versus the gold mines in this AI theme as it continues on.
And what kind of companies? So you're talking about the pickaxe companies, the picks and shovels suppliers. Yeah. That's a metaphor, of course, that actually refers to the California gold rush of many, many years ago. But it's what types of companies are those in the tech space?
Well, I would have put NVIDIA there actually, but I mean, they're just at the pricing there today. And to be quite clear, I think they could go another 40% from here. It's a fantastic business. But, I think that moves recently by companies like Dell, Supermicro, and even outlier players. One of the companies I really love is Block, actually. And although this isn't really a pickaxe maker in the space, it is inadvertently going to benefit from the development of AI in their existing business as well. So, but I love the movement more recently of companies like Dell expanding their cloud computing space, opening up more servers for AI companies. I think as this theme continues on, that they're going to be the ones who are going to benefit, or it's an easier win to see versus looking at the companies that are directly involved with AI development. So I prefer to play it that way as a platform business more than the direct software business.
Let's shift gears completely and talk about a Canadian company that is due to report results in about 1 hour exactly from now. That is Alimentation Couche-Tard, the giant owner-operator of gas station convenience stores. The stock has come off in recent months or so. We can put up a one-year look at ATD. What will you be watching for in these results, and what are your thoughts on this stock?
Yeah, I mean, it's a fantastic business. And I don't think anything that we're going to see in the short term, especially in this quarterly report, is going to change my mind on that. I mean, what I am looking for is a couple things, and I think everybody's looking for them. I mean, one, what's fuel volumes looking like, fuel sales looking like? That's a direct play on, or that's a direct correlation with consumer spending, especially as it relates to diesel fuel. And we know that that's been a challenge in the United States and Europe. So we'll be looking at that. We're going to be looking at same-store sales as well, and just looking at whether or not their merchandising strategy is going to continue to play forward. We're expecting to be a little light in both of those categories, and so I'm not expecting a huge report here. But as it relates to this company, I think that they have a long enough track record in place. I love their management. I think that they're going to continue to be successful. So although I think what I'm actually looking for here is an opportunity to buy in, because I love the company. I don't necessarily love exactly where it's trading at today. And so if we can get some softness, I'd be looking to buy.
That's interesting. That was going to be my next question. The stock is well off its peak, has rallied modestly over the past couple of weeks, but well off its high. You would like to see it a little cheaper before stepping in, would you?
Yeah, just a little bit. To your point, it has come off quite a bit more recently. But in saying that, I'd like to get through this quarterly report because I do think it's going to be soft, and I think that we're going to see a little bit more softness on this. So I think I think when we boil it all down, we might get a slightly better pricing coming in. But I don't think if you're really anxious and you want to get into this company and you have a long-term viewpoint on this, and I think you have to with the company like Couche-Tard. I think if you look at their stated goals of looking to double earnings, I believe it is over the next 5 years, I wouldn't bet against them being able to do that. And if you have that longer term view, I think any pricing you can get around now would be good. I'm just getting a little bit greedy, let's put it that way. And I think that I might be able to find a little bit better pricing in the next few days, perhaps, but we will see.
Okay, let's pivot to a company that has reported results just seconds ago. So you'll hear some information that you haven't heard before. FedEx is the company. FedEx has beaten earnings per share expectations. $5.41 is the adjusted EPS number. That is 7 cents more than the $5.34 that was expected. FedEx has raised its adjusted earnings per share guidance for the year 2025. It now sees that number reaching as much as $22 US per share, 22 even. The estimate from Bay Street analysts was 20.85, so a little less than 21. So the guidance is higher than expected. The company FedEx also expects to buy back $2.5 billion of its shares in fiscal 2025. And I have to admit, I don't know exactly where fiscal 2025 falls in the calendar year. But there you've got some fairly bullish information on FedEx. And we're now showing our viewers FedEx stock moving up by almost 8.5% in after hours trading. What are your thoughts on all of this?
Well, one, that's a fantastic report, and it's not one that I would have expected, to be honest, especially considering, again, the softness we've seen in consumer demand over the last 6 months or so, or even longer. So I think that's a fantastic report that does bode well for other companies that we're looking at, including Couche-Tard perhaps as well, as it relates to those fuel sales. And so that's a great report, and that's just showing that perhaps we might be overthinking the softness in the consumer demand, as you know, companies like FedEx call them money in motion companies, because if things are moving, people are buying, and that's a great sight to see.
Okay, another pair of stocks you watch, and we will have another guest, by the way, viewers, on FedEx coming up later in this program. Lowe's and Home Depot, the two home renovation giants, they have struggled recently as demand for home renovations eases off.
Yeah, I mean, I think that this is a continued story, again, but as part of the overall theme is, you know, hey, pocketbooks are being spread a little bit thin right now, and people are making decisions. We're also facing the fallout of big spikes in sales as you know, what occurred during the pandemic. And so we're seeing a bit of a hangover from that period of time, I believe. But on top of that, you've got stretched wallets as well. You know, this is all leading into a bit of a murky market, or a bit of a murky economy for companies like Lowe's and Home Depot. Now, that being said, there are some other challenges. I mean, we're looking at home prices, and I saw a report today. You know, home prices are extremely high right now in the United States. Home affordability has just gone way down in the United States. You know, we're looking at even renters. I mean, 30% of their income is devoted directly to their housing costs, their rental costs right now. And so all of this is leading to just strapped pocketbooks, and not only is homeownership trouble, but you know, the idea of building homes or renovating homes, I mean, that's getting pushed even further and further out. So I think that it is a short-term problem in the grand scheme of things for a company like Home Depot in particular. Which we do think is a good, if we were going to buy one of the two, we would be looking at Home Depot, to be quite honest. But I do think that in the short term, you're going to be facing this for at least a little while longer. And so we don't expect much to be coming in the next 6 months or so from either.